Okay, so the cue's a little somber this morning across our neighborhood. Lots of red on Asian markets, with Hong Kong leading the losses, actually, down about 2.5%. So therefore, the implied open is suggesting that we keep cooling off. Let's see if the actual market opening can buck this kind of weakness that we're seeing across Asia. Let's dial it down to stocks right now, and plenty of them to keep on the radar, some on the base of earnings and some on the back of other news flow. Our team is right here, so happy Monday to all of you guys. Vinny, let me start with you. Asian Paints, I think the color is red on this one, unless the market decides to be optimistic on the future. But tell us about the numbers.
So right now, yes, red for the numbers is what we were expecting. Nothing exciting coming in from Asian Paints. Domestic volume, look at it. It's seen a decline this time of 0.5%. Was the expectation was a volume growth of around 6 to 8%. Revenues, PAT, EBITDA margins, all of them are below the CNBC-TV18 poll. While in terms of Q2 performance, just a breakdown for that, revenue has seen a decline of around 5.3%. EBITDA is down almost 28%, and margins have seen a contraction of 480 basis points on a year-on-year basis. So sharp contraction in terms of margins. What led to this weak performance when you look at it? Because of the consumer sentiment being weak, there were a lot of rains that we saw coming in during the quarter, as well as floods in some part of the country impacted the performance. Operating margins also impacted because of the higher raw material cost that was there, and price increases on the raw material front, as well as increased sales expenses, and international business impacted because of the concerns in Bangladesh as well as Ethiopia, causing to some bit of a pressure even on the international side. Profits also impacted because there was a one-off this time, as well as a forex loss in Ethiopia. So yes, a coat of red is what we're expecting for Asian Paints. Even analysts are not too happy with the numbers.
Okay, all right, Vinny, thanks a lot for that. Just one point, in the last 1 month, the stock has lost 9%. So, the street is anticipating a weaker set of numbers. Sudarshan joins in, though, to tell us about how Tata Motors numbers. Sudarshan, a little bit disappointing, but they're guiding for better things.
Morning, Nigel. That's correct. So earnings were below estimates for Tata Motors. Muted CV demand impacted the earnings, while for JLR, production and shipment issues have weighed on the earnings. So first, talking about the numbers, consolidated Tata Motors revenue was down 4%, EBITDA has fallen 12%, and margin has come down by more than 100 basis points. Similarly, for JLR, revenue was down 6%, EBITDA margin has fallen more than 320 basis points, and even EBIT margin was down almost 100 basis points. So what but outlook by both JLR and Tata Motors were positive. JLR says volumes are expected to recover strongly in H2 FY25, and that's the reason it holds on to EBIT margin guidance of at least 8.5% or a little bit more than that. Tata Motors says it expects all-round improvement in H2 FY25 and also business to become net debt-free this year. So I'm going with mild red. Stock might open in the red, but may see a recovery intraday.
Thank you for that. Back to Winnie now for a pharma update. Winnie.
Yes, so we're keeping an eye out on two important stocks. One is Aurobindo Pharma as well as Divi's. This is on the back of their numbers. Aurobindo Pharma, not an exciting number coming in from the company. Revenue was in line, but we saw a miss coming in on the margins and profitability. Look at the revenue also, just a growth of around 8%. Margins, yes, seeing a bit of an improvement there, 20% versus 19%, but a poll was much higher in terms of expectation for the EBITDA margin at around 28%. So miss coming in on that front. Profits were a miss mainly because of the research development expenses spends were higher. OPEX spend was higher and taxes were higher, so that impacted the profitability of the company. US sales, marginal decline came in on that front because of Revlimid, but the core business that has managed to do well. So yes, not a worry on that front. Core was fine. Just Revlimid sales expected to be a slightly bit lower, so keeping an eye on that. Europe, rest of the world saw a growth of around 19% and 44% respectively. API sales muted is what we could call it. So all in all, revenue was in line. Outlook seems like quite positive in terms of when you look at it for the future of the company. But other than that, Divi's Lab, a very strong set of numbers on the other hand that you're seeing from Divi's Lab. Double-digit revenue growth driven by increased demand for consumer synthesis, custom synthesis, as well as emerging generics that saw very good growth. Custom synthesis saw a high interest and engagement from innovators, leading to good growth and expectations also being better. Generic sales, that growth was driven by volumes amid the high pricing pressure that one saw coming in. So keeping an eye out on the generic side of the business, a bit of a pricing pressure there, but all in all, good numbers from Divi, so green expected there.
Okay, yeah, Divi's did indeed turn out with quite a strong performance. Thank you for that, Vinny. Let's go back to Sudarshan. Ola Electric in focus, Sudarshan. Losses at least are narrowing?
So numbers mentioned in their press release after Q2 earnings do show some improvement on the operational front, but earnings overall were below estimates. So what all have impacted earnings? First, warranty provisions, second, employee and marketing spends, and third, premium segment, which is the major contributor to their total revenue. Deliveries of premium segment were down both sequentially and year on year, but mass segment has seen a growth of 15%. Also, company has maintained market share of more than 30% in Q2 FY25. Now, talking about the numbers, net loss for Q2 has come in rupees 495 crore versus loss of rupees 524 crore in the same quarter last year. Revenue was up 39% to rupees 1,246 crore, and EBITDA loss, as per their release, has come down to 223 crore versus loss of rupees 321 crore they have reported in the same quarter last year. So what do they say going forward? What are they are planning to see? First, they are saying that they are going to improve gross margin further from the level of 20.6% that they have reported this quarter. Also, they are going to launch overall 20 products over the next 2 years. That means one product every quarter, and they have announced launch of electric three-wheeler. Announced means they will be launching that electric three-wheeler in next fiscal, and they'll be using in-house sales in EV products starting Q1 FY26. But all eyes will be on company's commentary by when they are looking at the break-even level on EBITDA.
Okay, all right. Thanks a lot for that, Sudarshan. Well, let's hop across to Yash. Yash, you gave us a heads up on LIC's numbers. Were they as good as you were expecting?
Well, Nigel, let's bring some cheer as far as the earnings front is concerned. Very strong numbers from LIC coming in the second quarter. They were ahead of the street estimates, all counts, and again, very strong growth on a year-on-year basis. Total AP, that grew by 26%. It was ahead of the street estimates by at least about 600 crore rupees. Total annualized premium equivalent, that again grew by 26%, coming in at about 16,465 crore rupees, ahead of the street estimates. Again, retail AP, that grew by 31%, again beating the street estimates by at least about 1,400 crore rupees. Value of new business, that grew by a strong 47%, ahead of the street estimates by about 600 crore rupees, coming in at about 2941 crore rupees. Now, as I said, on Friday, all eyes will be on margins, and margins were bang on, coming in very strong at about 18% versus 15.29% on a year-on-year basis, and beating the street estimates by 350 basis points as well.
Okay, thank you very much for that. LIC, it was down for the last 2 days. Perhaps it will recover today. But Vinny's back with us for Fortis Healthcare. Vinny.
Fortis Healthcare, strong set of numbers, strong show coming in Q2 FY25. So expecting a green today. Revenue growth of around 14%. This was led by good growth that one saw in the hospital side, which saw 14% growth. Margins quite healthy, right? Look at the margins, 21%, 21.8% versus 18.6%. So healthy margins were led in both the hospitals as well as the Agilus business, which was aided by seasonality for Fortis Healthcare. Healthy occupancy is 72% versus 69%. Hotel margins, hospital margins, I beg your pardon, have also improved consistently due to increasing occupancies. And Agilus, the management is saying that they're eyeing double-digit revenue growth and 25% margins over there. So good show and good performance coming in from Fortis Healthcare. Green expected for the stock.
Okay, lots of Vinny stocks today showing green on the back of results at least. Thanks for that, Vinny. Let's go to Vamakshi now. She's watching out for a couple of other mid-caps as well that are in focus. Vamakshi, morning. So RTI Industries and GE Verona on your radar?
Well, absolutely, Surbhi. RTI Industries expected the stock to open in the red, and that is because it was a weak set from the company. Revenue saw an uptick of almost 12%, but the EBITDA was down nearly 16% after the operating margins contracted from 16% to 12%. The net profit too declined by 43%. In fact, the company has gone ahead and lowered its EBITDA guidance for FY25 from 1,450 crores to 1,050 crores, and the EBITDA is expected to be between 1,800 to 2,200 crores in FY28. The company says that the sharp dip in margins is mainly on account of its key product, MMA. They also witnessed lower utilization amid high channel inventory. GE Vernova T&D is the next one I'll be watching out for. Very strong set of numbers coming in from this counter. Revenue, EBITDA as well as net profit are at a multi-quarter high. Revenue saw an uptick of almost 59%, came in 15% higher as compared to street expectations. Gross margins expanded, EBITDA margin expanded from 8.7% to 18.5%. Resultantly, we're seeing a very sharp uptick in the EBITDA as well as the net profit. Ordering activity out here was also quite healthy. The company's, in fact, order backlog stood at a record high, and they witnessed an order inflow of almost 4,680 crores, which is a very strong inflow. So overall, going with a green for GE Vernova T&D.
On the ball as always. Thanks for that, Vamakshi. Well, let's hop across to Abhishek. He's here to tell us about Equitas SFBA. Morning, Abhishek.
Morning, Nigel. So it looks like the continued pain is seen in the rural economy because MFI or microfinance is hurting all the lenders. So Equitas, they have reported weak return ratios second quarter in a row due to elevated stress in the portfolio. So slippages have increased by 31% quarter on quarter. However, the slippage ratio is at 5.5% versus 4.5% in the previous quarter, which is on the higher side. So gross NPA ratio has inched up, net NPA ratio has inched up as well. Their net interest margin has fallen quite sharply to 7.69% versus 8.43% in the same quarter last year and about 7.97% in the previous quarter. With reference to the PNL, both the NI and PAT is below our poll. PAT is at less than 13 crore versus our poll of 157.6 crore. Utkarsh Small Finance Bank also saw a deterioration in asset quality. The slippages have increased massively over there, almost 250% on a sequential basis. Annual slippage ratio over there is close to 7.5%. Satin Credit Care, they have reduced their FY25 guidance with respect to loan growth to anywhere between 8 to 10% from 20% guidance that they had given in the previous quarter. Back to you.
Okay, all right. Got that, Abhishek. Thank you very much. So we'll keep some of these lenders also on the radar, specifically wherever we're seeing a lot of asset quality pressure build up. Let's quickly recap our list of stocks to watch this morning. The ones that have positive news flow are Divi's Lab, LIC, Fortis Healthcare, and GE, Vernona T&D, while stocks with negative news flow are Asian Paints, Tata Motors, Aurobindo Pharma, Ola Electric, RTI Drugs, and Equitas Small Finance Bank. Okay, so that's our list in terms of the stock board this morning. Plenty to keep our eye on. Also, let's get a roundup of all the commodity market action. We have Manisha Gupta joining in. So, Manisha, morning, the big events are finally settled. What's the latest in the commodity markets?
Oh, well, yes, the market's still digesting the last week's big events right now. And with that, we've seen the crude oil prices extend its declines. Remember, Friday was 2 to 3% of a cut, and Monday morning is 0.5% of a decline yet again. Well, the China consumer inflation is coming in the lowest for 4 months. The storm Rafael in Gulf of Mexico seems to be easing. And the markets, in any case, are expecting crude oil surplus in 2025. So that continues to weigh onto those markets there. But it isn't a different picture when it comes to metals. Gold, after putting in the biggest weekly decline in 5 months, has continued to decline today as well. Same is the case with the metal prices trading under pressure, the strength in US dollar, and the fact that China did announce $1.4 trillion package for local government, but China absolutely refrained from delivering targeted stimulus injections, and that's weighing onto the markets. So base metal prices, after declining in the previous week, have started Asia quite flat to negative right now as well.
Thank you very much for that.